Good afternoon and welcome to Nasdaq Trade Talks. I'm your host Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Ted Bragg. He's the head of U.S. Fixed Income at Nasdaq. Ted, thank you very much for joining me. There's a lot on tap in your world this week. But before we get into that, let's talk about the way the yields have been trading. They've been relatively range-bound recently.
Yeah, so it was interesting. Since the last time we spoke, 10-year notes went well behind 3%, and everybody thought it's a breakout. And then a lot of things happened in Europe and the world, and all of a sudden we were back below, and I think went all the way down to 285, and we've done nothing. So 2-year notes have hung out at 2.5, 10s have stayed right below 3%, and we're creeping a little bit higher right now, and then I think the rest of the week will decide which way we're supposed to go.
Well, the hot topic of the week, of course, is on Wednesday when we get the FOMC rate decision. That seems to be that it's pretty much baked in. So the question is, how much more will we get for the remainder of 2018? So do you think we will get more beyond tomorrow's decision, and do you think the economy is overheating?
Yeah, so the debate has been, is it 3 rate rises this year or 2? We had one, the done deal tomorrow, and then we had a CPI number this morning, 2.8% year over year, a 0.2 of an increase for the current month. So yes, all of a sudden inflation is starting to pick up. We had a payroll number that said, wow, unemployment is the lowest it's been ever. What is the message? So we know they're going to raise rates, but what is the message from the chairman? And is it we're going to go in September and December? But what the street had kind of priced in was maybe just one more rate rise. So now we'll look at two rate rises. And then does the statement suggest we think the economy is really starting to overheat, or is it slow and steady, neutral rate? And that's, I think, the balancing act that they have to message properly.
Well, how did the market react off the CPI number this morning?
Yeah, we said that briefly when I first met you. It's a strong number, and we're back 2 basis points, 296 on 10s, 3 basis points on 2-year notes. A long bond auction just happened at 1 o'clock, and it was successful, went well. And a lot of supply this week, right. And that's all out of the way. So is the street long, and is everyone a little bit complacent, and now do we get the chance for a backup because people are positioned in the wrong spot? You
mentioned that there was a lot of supply in the auction this week. Is that a concern at all?
It continues to be a concern. An extra $1 trillion in securities that have to come to market, a central bank that is no longer buying back securities, and then why this is a big week, ECB tomorrow, right. Bank of Japan on Friday, where ECB tomorrow is also going to talk about potential buybacks and what does that mean. So it's the natural rate of where interest rates are going to have to be because the investor community has started to participate, not because the central banks have pulled it in all on their books. And what's that real natural rate, depending on them, what your inflation expectations are.
Let's talk about the events in Singapore with President Trump and Kim Jong-un this morning. That, the market really didn't have much of a reaction off of that either. You've also had, look at emerging markets as well, between Italy and some other countries. There seems as if the markets are digesting all of this news well, but there really are a lot of outliers.
I'd argue that what came out of Singapore really wasn't a market event, and instead what went on in Italy the last few days, a statement that suggested they would never leave the euro, a 50 basis point rally in their short end of the market. And you're absolutely right. The emerging markets are under tremendous pressure. Big liquidations in the ETFs and out of the bond portfolios in emerging market bonds. Where does that money go? Sometimes it immediately goes into the treasury market. So flight to quality, it stays there. And if everything calms down, then it dissipates and has to come back out. And I have a feeling we had some of that little flight to quality that held the market in with no one really paying attention to Singapore right now.
All right, let's wrap it up with Nasdaq Fixed Income. What's going on there?
New clearing for Nasdaq Fixed Income, that's happening now. We had some clients already migrate on Monday. Next month, you'll see an announcement of a new futures contract for us. Really looking forward to this. Cash settled. We're calling it dollar value of a basis point futures contract. It'll be listed on NFX. So that's July 18th. And then a new matching engine in October. So total replatform, moving into the top of the line Nasdaq technology. And our clients now know about the new spec. Everyone's starting to write to it and do the work, and that's where we're really looking for some additional uptick in the marketplace.
All right. Well, thanks very much, Ted, for joining me at MarketSite. And traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.